It is almost the end of year 2022. The past year has been very tough for many investors, no matter in stock, bond, cryptocurrency, or real estate. It will be attempting to harvest some capital loss before the year ends. However, there's a rule called wash sale to watch out. The wash sale rule is a tax rule that applies to investors who sell security at a loss and then buy substantially identical security within 30 days before or after the sale. If the wash sale rule applies, the investor cannot claim the loss on the tax return. This rule is intended to prevent investors from engaging in transactions that are solely for the purpose of realizing a tax loss without actually changing their investment positions. The 1099-B helps you deal with capital gains and losses on your tax return. When you sell something for more than it costs you, the profit is a capital gain and it may be taxable. On the other hand, if you sell something for less than you paid for it, then you may have a capital loss, which you might be able to use to reduce your taxable capital gains or other income. Alex buys 100 shares for $1,000 in September 2022. In October 2022, he sells them for 600. Within 30 days of the sale, he buys 75 shares with the same CUSIP number in the same account. Since his loss is 400, but the loss on the 75 shares is disallowed, his disallowed loss is 300. Report the 600 gross proceeds from the sale in Box 1D, 1,000 basis in Box 1E, and 300 wash sale loss disallowed in Box 1G. The 300 in disallowed loss is added to his base in the newly purchased 75 shares. To further clarify this situation, I tabulate the scenario in the Excel. As we see, the transaction number 1 established a position. The transaction number 2 generated a loss. The transaction number 3 disallowed the wash sale amount. It is very easy to make mistakes on the numbers and mixing up the proceeds and the cost basis. Therefore, double, triple, and cross-checking are necessary to iron out any errors. If you receive 1099-B by surprise that indicates you have a wash sale amount disallowed in Box 1G, you can trust the form and pay the tax, but you cannot just adjust all the cost basis of the purchase. A correct way is to check any purchase during the 30 days before or after the sale. If you have no such purchase, you should adjust the cost basis for this 1099-B because it is incorrect according to the rule. Otherwise, you can adjust the cost basis of the new purchase and keep the records for further filing. You need to have an accounting book that tracks all transactions.